Hello and welcome to the Power of Passive Investing. We have an amazing guest today, Neil Henderson, and we're excited to interview him. Neil, welcome.
Alina, it's great to be here. Thanks for having me.
Thank you so much. Neil, why don't we start with you sharing a little bit about yourself so our listeners can learn more about who you are?
Sure, I'll give you the short version. I grew up in Las Vegas, Nevada, Air Force brat, son of a local television executive. I fell into real estate starting in 2013. We bought a house in Las Vegas, Nevada that had a guest house at the front of it. And for about a nanosecond, it was going to be my office and my ultimate man cave. So before my wife said, yeah, no, that's not happening. It's going to be where our guests stay when they come to visit. And so we appointed that little guest house like a really nice little hotel room. We had a little coffee bar, a microwave, a small little refrigerator, and and that was a great place. We had, my in-laws came to visit several times, had friends come into town. And then on Christmas Day of 2013, my mom, who's one of the smartest business people I know, handed me an article about this company called Airbnb. And
Hmm.
said, I think this would be maybe a good thing for you to do with your little guest suite at the front of your house.
Mhm.
And we're far away from the strip in Las Vegas. We're way out on the west side. And I was like, yeah, whatever, mom. Okay. But then I thought about it, and in early January, I went out and I took some photos of the place and um, put up a listing on Airbnb. And within about 3 days, we had our first booking.
Wow,
And,
impressive.
and so that was January of 2014. I actually just went back and confirmed this last night. And from there until March of 2020, when COVID hit, we had 65% occupancy. We were one of the highest rated listings in all of Las Vegas. And that was sort of how I got into real estate. And I'll stop there and you can ask follow-up questions.
Yeah, no, that's really amazing, Neil. So, you enjoy that with your guest house. Have you ever thought of buying more housing in the area?
That's exactly the path that I eventually went down. It took me about a year before I realized, wow, this is really good. I mean, we don't have a mortgage. We're actually being paid to live here. Uh,
Sure.
and I knew nothing about house hacking. It was just like, oh my God, I'm able to put more money towards my mortgage uh, than I'm paying. And this is fantastic. And I remember going out on the web and searching for ways to scale my short-term rental empire. And I eventually found this website called affordanything.com by a woman named Paula Pant.
Yep. I've heard.
She had written an article about she had a bunch of long-term rentals and she had converted one to short-term a short-term rental, and she was kind of comparing and contrasting a long-term rental versus a short-term rental.
Mhm.
And I don't remember anything more about that article other than there was a little link over on the side of her website for another website called Bigger Pockets.
Yep.
And that is when I went down the rabbit hole. And I spent probably, I don't remember exactly when that was. It was probably early 2016.
Hmm.
And I started just watching listening to every podcast, reading, hanging out on the forums, and just sort of eating at the buffet table of all the different real estate strategies, driving my family absolutely nuts. I would come to them every other week and say, "Oh my God, there's this strategy called lease option sandwiches. It's so amazing, and you can do this and do this, and short-term rentals and long-term rentals and multifamily and small multifamily." And my poor family went nuts. And eventually uh, I ended up sort of going to some of the local RIA meetings and meeting people who were doing it. Couldn't really figure out how to make it work in Las Vegas. Las Vegas at the time was really a house flippers market,
Sure.
and I didn't want to be a house flipper. Um, Las Vegas also was started becoming really hostile to short-term rentals, and so I was like, all right, well, what do I do? And a friend of mine invited me to a conference I had no business going to in February of 2017 called the Best Ever Conference. It was the first annual Best Ever Conference. And
Sure.
at that conference, I met who's a guy who's now one of my primary mentors, Joe Fairless, a mutual friend of ours.
Yep.
And I met my future business partner, Eric Hemingway, who's in storage. Uh,
Got it.
yeah.
That's incredible. And I'm thinking that Neil, we probably were at the same conference at the same time. Was that in Denver?
Yep.
Yeah. Anyway, but you know, at a place with 500 or more other people was huge. I remember it was humongous.
Yeah, and I mean, I had no business being there. It was mostly, at the time, it was not quite so multifamily syndication heavy, but most of the people who were there had been in real estate at least for a couple of years and had some deals under the belt, and I just had my little short-term rental.
Yes, I did have the same imposter syndrome at the time, so I can very much relate to your feeling. That's exactly how I felt. I wasn't sure why I was there, but it was nevertheless exciting and great because I could talk shop to every single person, and that's something that I didn't have at work because I was still a W-2 employee at the time. So yeah, very much relatable. So you met Eric at that time, and from that point on, the rest is history. You started working with him.
It was a long and winding history. Uh, we just clicked when I first met him. I literally met him at a lunch buffet table that changed the course of my life. I literally sat down. It was the lunch the first day. I think I'd just seen Scott Myers speaking on stage talking about self storage. I'd never thought about it investing in self storage. And I sit down at this lunch buffet table, and this guy and his daughter are telling the story about how he built his first self storage facility, and then they went and they lived on a sailboat for 3.5 years. And I was like, oh, I need to get to know this guy. And we hung out the rest of the conference and hit it off. And he invited me out to his home in Wilmington. And he said, anytime you want to come out, come out to Wilmington, see what we're all about. And I went home and I told my wife, I said, hey, uh, we had a new baby at the time. I said, you want to go for Memorial Day weekend? You want to go to Wilmington, North Carolina? She's like, sure. Why? And I said, well, I met this cool self-storage guy. And so my wife and my first trip away without our child after he was born was to Wilmington, North Carolina to come and hang out with Eric.
Very romantic.
And yeah, very romantic, but it's a great town. We had a great time. And Eric and his wife, Rachel, were fantastic hosts. And he just drove me around, showed me his different projects. And I don't know, we just clicked. And in real estate, real estate's a relationship business. And I didn't know exactly what was going to come of it. And I don't think Eric did either. We were kind of feeling each other out. We stayed in touch. I sort of told him I had ideas. I was like, Eric, you need to start syndicating. And he's like, no, I'm not ready. Um, and we just stayed in touch. And then eventually, I mean, it took forever. We had some false starts. And then finally, in February of 2020, at the Best Ever Conference in, where was it? It was up in the mountains above Denver. All I remember is I was hypoxic for most of the weekend. Um, I took Eric and his son Levi, who's his primary business partner, aside, and I said, "Listen, I want to help you guys get to 100 million assets under management. I think it's time you start syndicating." And they said, "Let's go, let's do it." And then we all came back from that trip, and COVID hit and delayed us all for about another year. Um, but finally, in October of 21, we syndicated our first deal, and I moved out here to Wilmington to live here full time.
Amazing, amazing. And Neil, what were you doing prior to working on self-storage?
I had an 18-year career as a defense contractor for the United States Air Force.
Oh, wow.
Nothing completely different from what I'm doing now.
Completely different, but yeah, it's from, side that sounds very exciting, especially these days, probably in high demand.
It was, and that was really before that. I was an actor. I really just sort of fell into that job as
It was
well.
in Eugene's, right? I'm sorry, I'm interrupting, but it sounds like it was. And from your dad, I think you said your dad
Yeah,
was.
my dad was former military, so I grew up around the military, but I was an actor in Los Angeles, and I literally fell into a job where I was doing some classified voiceover, and I had a security clearance. That was back in late '90s, and then 2001 happened, September 11th, and that security clearance became very valuable. I sort of hit age 30 and was the acting thing was not really putting food on the table. And I had an opportunity to go and work for a company back in Las Vegas as a defense contractor and learn on the job because it was actually easier for them to bring me on and let me learn on the job than it was to try and find somebody who knew how to do the job and then get them security clearance because it took so long.
Sure.
And then very interesting work, especially early on. We were in the middle of two wars. It was high ops tempo. Really felt like I was making a difference for the warfighter. And then as time went on, the ops tempo started dropping down, and um, the job just became more. You work in a lot of windowless rooms,
Mhm.
um, and that starts to get to you after a while. And I sort of realized I don't think I can do this for another 10 years. And I started looking for an exit plan, and real estate was it.
Excellent. So essentially, Eric brought you that exit by partnering with him.
He did.
Amazing. That's really incredible. And how would you describe your current role? What do you do in in your firm?
I'm one of the general partners, one of four general partners, Eric, Levi, Clint, who you've met, and then myself. And then my primary role is Director of Investor Relations and Marketing.
Got it. Amazing. And it sounds like you kind of fell into this role as well and learned on the job because being defense contractor does not necessarily directly translate into director of investor relations, although I bet there are a lot of transferable skills in the field.
I One of the primary contracts that I worked under was um, teaching people, teaching our coalition partners how to fly and fight their airframe, whether it be an F-15 or F-16 and F-35. And a lot of that was kind of a multimedia role. It was educational, multimedia, and that is sort of the only part that's sort of translated for me. And then also around the office, they joke that I'm sort of the compliance officer. I'm usually the one that says, I don't think the SEC would agree with your interpretation of that rule. And I think a lot of that comes from just working in under, with class information that, you sort of become a real rule follower.
Neil, I think you're underestimating the skill set that you brought in. When you were teaching, that I'm sure required a lot of patience. When you're working with people, and real estate is a people business, especially in the client relations role, you do need to have a lot of patience because some people just need a lot more hand holding or have a lot more questions or just need more clarifications in general. And it does require a lot of patience, and I'm speaking from personal experience as well. So I'm sure that has helped you, by taking that teaching experience into the syndication world. I'm sure that helped you a lot as well.
Well, it was an idea of taking complex subjects,
Of
uh,
course.
and then being able to communicate them in a way that people can learn and absorb it,
Yes.
and understand it. And that's often where I see my role in investor relations. I never I never look at myself as a salesperson. It is a sales job, but I always look at myself first as an educator, and just trying to understand what people's goals are,
Mhm.
understanding is, and then making sure that our goal and our offering and their goals align. And if it works out, it works out. If it doesn't, there's plenty of other opportunities for them.
Of course, and yes, and I appreciate you sharing that explanation. Neil, I know that Clinton, you share the responsibilities in terms of the investor relations. uh, how would you say your roles are defined so that there is a clear separation of duty or clear path for each of you?
Great question. Clint comes from a sales background. He's an extrovert, um, ADD, and I say that with love, and he knows it.
Yes, yes,
Um, and I'm I can have a great conversation with an investor. Clint is a salesperson, and he just has that aggressiveness and sort of Clint sort of acts as our closer, I would call him.
sure.
And I act more of the systems and processes, and and sort of I call myself sometimes a Clint Wrangler. Just keeping him contained and on task and heading in the right direction. And it's very simpatico. We have, as you said, we have a pretty good we have pretty good complementary skills.
100%. Yes, and I've seen that in action. You definitely do. So it makes perfect sense for the two of you to work together. And how long have you guys been working together so far?
Since October of 21, we
Oh, wow.
here. I met him through my podcast. I interviewed him. I had a previous podcast, and then he started following me on Facebook, and we just, started following each other's journeys. And at one point, he's like, for somebody who lives in Las Vegas, you sure talk a lot about investing in North Carolina. What's up with that? And I said, well, my future business partner is in North Carolina. And he's like, who is it? And I said, Eric Hemingway. He's like, oh, I know him. And, and that was kind of how we all came together, at the same time.
Got it. Yeah, it sounds like it was meant to be.
Yeah.
Amazing, amazing. Neil, you mentioned that your mom sort of was your rich dad, poor dad in a way because she opened up the world of investing to you by sharing the article. Um, do you think you would have eventually came to it on your own, or do you like completely give full credit to your mom because she did that for you and opened up the world of investing?
It's a great question, Alina. I don't know the answer to that, but I'll give her credit. She always, all through my life, was sort of there. I mean, she wasn't a college graduate. But she was a very successful uh, television executive. Became the primary breadwinner for our family through most of my life. I mean, my dad had a very successful career, but he was a military officer. They don't get paid a lot. But she was always there, sort of. She would feed me little ideas every once in a while for business ideas. And I didn't take a single one until that one. And it just clicked with me. And so I give her full credit for that.
And you totally should. And you just confirmed my assumption that you did follow both of your parents' footsteps in a way by, working on TV and then being in the military. Well, not the military, but a contractor, but still you worked in two industries that your parents had been working all their lives, essentially, which probably does run in the family, runs through the genes, which is amazing. And you also reminded me of my TED talk where I share with the folks, so, you and I kind of talked about this, about empowering parents to teach their kids financial literacy at home. And I said it before, and I'm going to say it once again. One does not have to have education or necessarily the background to teach kids financial literacy, but they can teach from their own experience and their own mistakes. And that's essentially what your mom did. You said she was a successful executive. Even though she didn't have a degree, she was still successful in her line of duty in what she was doing. And she shared with you what she thought was the best of the world to make you successful. And finally, you did take her advice, and it looks like it put you on a right path for you because look where it brought you. I mean, you're enjoying what you're doing, you're enjoying your journey, and you bringing other people into the world of passive investing and helping them to become successful passive investors as well.
I consider myself very blessed to have the parents I did. I hit the lottery.
Yeah, Amazing. I love it. Let's talk a little bit about the business you're in, the self-storage. So why don't you share with our listeners why self-storage? Why do you believe in it? And what did you personally find in it when you started investing?
Well, it was commercial real estate in general. I love because it's controllable and it's repeatable. Like I cannot tell you, I love Apple, I love Tesla, I love Nvidia. I cannot tell you why Apple or Tesla or Nvidia are valued where they are right now.
Mhm.
And I can tell you that Apple will probably be worth more in the next 5 years than they are now, but I can't tell you why.
Sure.
Whereas with commercial real estate, I understand it. There's math behind it. There is, it is revenue minus expenses. Gives you an NOI. You divide that by a cap rate, and you have the value.
Yep.
And that drew me. That's what intrigued me about commercial real estate to begin with.
Mhm.
And then once I sort of broke that code and maybe sort of got me venturing away from residential real estate, which can be great, but is a lot more squishy.
Mhm.
uh, I started looking for opportunities to get involved in commercial real estate, even though at the time I didn't even own a single long-term rental. I didn't own anything other than my personal residence. But syndication is a team sport, and I started looking for ways that I could contribute and add value to that. Um, but your question is about self-storage. Self-storage intrigued me at the time that I found out about it. Everyone was going after multifamily,
Yep.
and that seemed, and it's great. I love multifamily. I didn't love the idea of having to deal with tenants, trash, and toilets.
Mhm.
Self-storage is very, very simple. You're just renting someone a box of air, and they're on a month-to-month lease. And when they move out, you have somebody come out and they sweep it out, and you rent it to the next person. I also liked that self-storage, the expense ratio with self-storage is really great. It's on average, like multifamily, usually 50% of your revenue is going to go towards expenses, not including the debt service. On
Yep.
self-storage, it's actually closer to 35%. So it's a much lower expense ratio. Uh,
Excellent.
and it tends to keep going down the longer you hold the asset. So that was what really intrigued me about self-storage. Very simple business model. Um, it has done well in good times and bad. It's a trauma and transition business, and so when times are good, people buy too much stuff and they put it in storage. When times are bad, people are typically moving around and they store their stuff as well.
Very nice. Neil, based on what you're describing, and since you were comparing it with multifamily earlier, it sounds like self-storage is a lot more active business than multifamily, especially since the leases are on a month-to-month basis. So does it mean that you guys in your particular business model have to hire a lot of personnel, or is it automated and run by robots? Like, what do you guys do?
Well, there are people who have their unmanned storage facilities. Only one of our facilities in our portfolio is unmanned. It's sort of a satellite facility for one of our other facilities that's right nearby that is manned. Typically, you do have a manager on duty, but the technology is rapidly advancing to the point where people are interacting with the managers quite as much as they used to. The
Mhm.
old self-storage model was usually you'd have somebody living in an apartment on site, and then they'd be in the office, Monday through Friday or Tuesday through Saturday. And nowadays, you typically don't want a manager living on site. You've usually got a manager that's there, but in actuality, you don't usually want them just sitting in the office, because how often does someone come in? You don't have that many people coming in to rent a storage unit. They're usually renting it online. They're using their phone to find it. Um, a lot of times they're able to rent it without ever meeting anyone, ever talking to someone. And a lot of times what you want is your storage manager to be out there in the community talking to apartment managers and businesses and things like that and trying to increase business.
Sure, it
I would
makes
I would say there's I would say it's a less active business than multifamily just because you don't have as much maintenance.
sure.
You
No plumbing.
no plumbing. You don't have a maintenance. You have a maintenance guy, but he's going to probably be there once a month to fix any sort of issues that pop up. You don't even have electricity in most of the units. Otherwise, if you do, people tend to like find a way to live in them. You don't want that. Um, so yeah,
Excellent. And since we touched upon AI and recent technology, are you guys including AI in your overall business?
I am personally. I mean, we're leaning as a business. We're leaning into it. Um, I don't know. I can't speak on the management side for how much they are. I can tell you that I'm using AI every day, and I've told my team that they need to be uh, thinking not how can AI do this, but how can AI help me do this faster or more efficiently. Um, and I'm finding myself because I'm so deep into it. I'm a bit of a technology geek, so I dug into it. I have to kind of I'll pass things on to our different departments about, hey, if you thought about this, if you thought about this. Um, so AI, I mean, it's here, it's not going anywhere. Um, so the answer is yes, we're definitely leaning into AI.
Excellent. And as a true business owner, that's what you're supposed to be doing. Whenever you find something that you believe could be a shortcut for one department to another, you want to recommend it to them because, hey, maybe they haven't even thought of that. So it's definitely good practice to do in general for your business. Neil, as someone who's been operating in the investor relations world for a while now, have you noticed any change in raising capital in the last 2 years? Has it become easier, harder, and what do you notice, and where do you think we're heading with that?
It got very hard. It got much harder, probably, I would say 2 years ago.
Mhm.
One interest rates shot up faster than they have at any time in our history. They're not historically high interest rates, but they just shot up so quickly. And I think that caught a lot of people by surprise. Um, and that created a lot of distress and uncertainty in the commercial real estate world because a lot of commercial real estate values are based on cap rate. Cap rate is often correlated is correlated with the interest rates, and so you had a lot of multifamily operators that got into some trouble. Paused distributions. They had people doing capital calls, and so there was this sort of heyday for commercial real estate and syndication from I don't know 2015 to about 2021, and then all of a sudden some cracks started to show, and I think a lot of investors pulled back. Um, I think I don't have the exact numbers, but I would say it's it's costing us probably 30% more to find investors, and we're finding 30% less investors, and it's taking us 30% longer to get them to invest.
Oh wow, those are strong numbers. Very
Uh,
strong.
that's not my numbers, but that's, when I talk to other syndicators, that's what they talk about seeing, the ones who've been in this a while. And a lot of it is that people are a little spooked. There's uncertainty. The stock market's been doing really well, so people kind of, people go there. People can put money into a high yield savings account and they can get a pretty good return as well. And so you're competing with more of those. But I will say that I feel like we're entering a new cycle right now, personally.
Sure.
I don't know that it's officially began. We talk about sort of making it through what we call the valley of death, and we feel like we definitely feel like we've hit the bottom and that we're on our way back up. We're starting to see opportunities that we were not seeing 2 and 3 years ago.
And let's dive a little bit deeper into that, if you will. Is that because you see distressed assets or the banks coming to you, or something else? Share with us a little bit more.
I would say we're not typically going after distressed assets like that. But owners, people who've owned real estate for a long time, have in their head what it's worth. And
Mhm,
there was a period when it was worth a lot. And then once interest rates shot up, it took a while for the sellers to sort of recalibrate
mhm,
to sort of the realities of the new market. Um, and they're now starting to go, okay, if I'm going to sell, you've got baby boomers who are looking to retire and they're going, all right, I'm not going to be able to sell this for 12 million. I can maybe sell it for 10. And they're happy with that because they've owned it forever. And I think that's on our side, the way that we go looking for deals. I think that's the primary reason that we're starting to find them. And we're also having brokers bring us more deals that just make sense. They pencil.
sure. Are there primary markets for your team that you focus on?
Yeah, we have primarily focused on the Southeast, Virginia, North Carolina, South Carolina, Georgia, and Tennessee. We don't, I love Florida. I'd love to get down into Florida. The insurance market in Florida has kind of spooked us. We're kind of staying away from there for now. But we're NASCLA certified, which is a contracting certification. So we're actually certified to operate as a contractor in something like 30 states. So we're starting to sort of expand our footprint, but we've been pretty happy with the opportunities we've been finding in the Southeast.
So the certification, I'm sorry, I've never heard of it before. Does it mean that you guys don't only do value add, but you also build a brand new facilities as well?
Uh, we have we have not built a facility from the ground up with investors. Obviously, our founder, Eric Hemingway, is a contractor, and he did build his first facility from the ground up. We're exploring doing some ground up development, both on sort of our side, and we've got a construction team that may take on some projects with third parties. Uh,
Mhm.
we're pretty happy playing in our little pond with conversions. We like that. There's a little bit less. We're able to sort of buy these buildings for less than it would cost us to do ground up development and then get the facilities open at a faster timetable as well.
So wait, you're converting existing warehouses or something else?
Yeah. Yeah. So our primary strategy is we take old big box retail buildings, old warehouses, mills, and we take them and convert them into climate controlled self storage.
Oh wow, that's amazing. That's incredible. I've heard someone take on some of the closed down Kmart's and convert them into self-storage, but I don't recall the name of the firm that does
Yeah, we've done two. It's not, I mean, it's not like we discovered something that nobody else is doing.
that. Right.
We've done two Kmart's are on our own. We've done a grocery store, a couple of mills, an old bottling plant, and the uglier the building, the better.
Nice, nice. And is it like a huge money saver in terms of new conversion, in terms of new development versus conversion?
It can be. I don't want to speak on a blanket term, but on average, we're buying these buildings for, 25 to $30 a square foot. And that's all in. That includes the bricks, the
Wow.
sticks, and the land. Oftentimes it's below replacement cost. And
Mhm.
then it costs us on average about 40 to $45 a square foot to convert it to storage. So we're usually our last five deals, we were all in for $65 a square foot. If you and I were to go out and build a ground up self storage facility, on average, it costs about $120 a square foot, and that doesn't include the cost of the land and entitlements. You're also usually, if you got the land, you're going to be dealing with entitlements and zoning and putting in the infrastructure for anywhere from 12 to 36 months. Where on average, we're from the time that we close on a property to open the doors is on average 12 months.
Amazing, amazing. I love it. And you touched upon zoning. So do you need to change the zoning on these projects
Not
usually?
not typically. It's typically in a it's usually commercial. We usually have zoning locked up before we even move in. We've had to, I think, change zoning or get a conditional use permit a couple of times. That may slow us down a little bit, but we're talking 3 months as opposed to 36 months.
Wow, that's huge. That's a big saver, of course, and I'm sure that makes your investors happy because they get distributions a lot sooner versus if it were a new construction.
Yes.
Very nice. And one last business question before we get to the to personal ones. Um, at this point, what would you say is harder to find deals or to find capital?
Ooh, good question, Alina. I would say right now it's still harder to find deals. I mean, it's capital's hard to find, but when you've got a good deal, the capital still finds you.
Amazing. Awesome. Neil, it's been an amazing interview. We always ask, what is the best way for our audience to find you, either on social media or to contact you?
Yeah. Nomadcapital.us is our website, and people can just email me, Neil at nomadcapital.us, and Neil is spelled the correct way, Neil.
Uh, Awesome. And I'm putting that in the chat for anyone who wants to find the website or to reach out, just Neil at nomadcapital.us. Excellent. And one last personal question that we ask, how do you like to give back to the community?
Great question. My wife and I like to volunteer at a local food bank. We probably do that once a month. We take our son,
Wow,
um, and
that's a lot.
and then I love getting out into the real estate community. We have a monthly meetup that we go to. There's no, it's literally just a networking meeting. We tried doing speakers and things like that for a while. We all agreed eventually that we much preferred just getting together and geeking out about real estate. Um, I will usually, um, to this point, I will usually always go out for coffee with somebody if they're local and they ask me to out to coffee and they want to learn more about real estate. I'm a big believer that you need three things to be successful in real estate: time, experience, and money. Most people either they start off, they've got a lot of money. Usually, chances are you're probably going to be better off handing that off to somebody with more time and experience. But then there's a lot of people that start off that have no money and they want to learn. And I think it's good to give back and allow them to learn from somebody who has more experience.
Absolutely, completely agree. And thank you for that volunteering. It sounds like you do a lot. And I like that you bring your son along with you. I've done that too. We volunteered together with my son also. So that's amazing. Neil, it's been a very interesting interview. Certainly appreciate it. I'm sure our audience will appreciate it as well. Thank you so much for it. Until next time, goodbye.
It's been my pleasure, Lena. Thank you.